Hi, this is Dan McLaughlin, and welcome to a short presentation on the Irish commercial property market as at the end of September 2015. I think it's fair to say that commercial property just doesn't get the same exposure in the media that residential property does. Nonetheless, I think it's worth looking at in some detail for a variety of reasons, I think. Firstly, commercial property, of course, is reflective of the general health of the economy. And as we'll see, commercial property in Ireland had an extraordinary crash during the recession, and of late we've seen pretty sharp recovery, and suggesting, of course, that the economy itself is doing a lot better. Secondly, commercial property is a potential investment opportunity, and over recent years we've seen REITs open up in Ireland, giving individuals the chance to get exposure to the market. Thirdly, commercial property was one of the main reasons that the Irish banking sector realised such huge losses over recent years. That was partly due to the transfer of a huge amount of commercial property and land banks to NAMA, the National Asset Management Agency, and of course, as a result, NAMA acquired a huge commercial property portfolio, not just of Irish properties, but abroad as well, particularly in the UK and the US. And in recent years, the Irish NAMA is now beginning to sell a lot of those commercial properties in Ireland, again indicating that the market is a lot healthier than it was. As I suggested, the precipitous decline in commercial property prices in Ireland was a prime factor in the losses that opened up in the Irish banking sector. And here we have a measure of Irish commercial property prices as recorded in the IPD index. And what I've done on the chart is to rebase the index back to the end of 2007, the fourth quarter, which was the peak of the commercial property cycle. And as you can see, we had a huge fall in prices through 2008, 2009, and prices continued to decline, albeit at a slower pace, right up to the middle of 2013. Since then, we've seen a recovery, which has actually been quite sharp, as we'll see, but nonetheless, over the 5-year period, the value of Irish commercial property fell an extraordinary 67%. In this chart, we look at the returns on commercial property over the last few years, again as defined in the IPD index. And we can see clearly that, particularly in 2014, we saw stellar returns. The market saw a 40% gain, about 30% due to higher capital values, and another 10% or so through higher income. As you can also see, the market seems to have lost a little bit of momentum of late, so the annual growth is beginning to slow, but nonetheless is still growing at a very rapid pace. In this chart, we break down those annual returns into the different sectoral components, the retail sector, the office sector, and the industrial sector. And it's very clear that it's the office sector that has been driving the recovery in returns. In 2014, the office sector returned over 45%, far outstripping the other two. Retail was second with around 35%, with industrial lagging at well under 20%. So it's very clear that it's the office sector that has been driving the recovery, particularly in its earlier stages. So what eventually prompted the recovery in the market? I think we can put it down really to the fact that prices fell to such a level that it became a very attractive investment proposition. And we can see that in this chart, which shows you the equivalent yield on commercial property. And during the boom years, the equivalent yield declined steadily to at the top of the cycle, the equivalent yield had declined to only around 4%. But then, of course, the precipitous fall off in prices resulted in a very sharp rise in yields, and by 2012 or so, the equivalent yield had risen to above 9%. I think in an environment in which short-term interest rates had declined to around zero, and longer-term interest rates, bond yields, had also fallen to levels rarely if ever seen, meant that a lot of investors seeking yield began to look at the kind of opportunities available in Ireland. And as a consequence of that, we've seen strong investor inflows and driving a repricing of the market, and as a consequence we now see yields down in 2014 to around 7%. I suppose the interesting question is, why was it foreign capital that drove the recovery? And I think it was largely reflects the impaired nature of the Irish banking sector at the time, which was not really in a position to provide any lending to investors looking to take advantage of what turned out to be prices at very attractive levels. That repricing of the asset driven by investor interest can only go so far, of course, because ultimately what we need to see is end user demand. And of course the Irish economy over the last 18 months or so has started to grow very strongly. We now think that GDP growth in 2015 will be around 6.5%, following 5.2% growth in 2014. And as a consequence, what we're beginning to see is a significant rise in rents. In this chart we see the Lisney rent index showing the annual change in rents in the main sectors of commercial property. So again, it's pretty clear it's the office sector that's been really driving the recovery. So office rents up around 35% by the first quarter of 2015 on an annual basis. And we're also seeing a little bit of movement now finally in retail rents. I think consumer spending in Ireland was slow to recover, partly because I think consumers are still deleveraging. But now we're seeing a bit of a pickup in the momentum in terms of consumer spending, and that is now, I think, beginning to feed into higher retail rents. So initially, certainly a repricing of the asset, investor driven, but now I think what we're seeing is some movement in terms of end user demand, which is pushing up rents. The value of commercial property, of course, like any other asset, is determined by demand and supply, with one caveat in terms of commercial property, of course, is that there's quite a big lag between any changes in demand and any resulting change in supply. It may take 18 months to 2 years, for example, for supply to respond to demand. And that gap between the two obviously tends to exacerbate the volatility of the market. And here we see the office space under construction over the last 10 or 15 years in Ireland. And clearly in the middle of the noughties, with a very buoyant market, we saw a very significant increase in supply. So by 2007, there was perhaps 3.75 million square feet being added to supply in the market. And even 2008, that was still something of the order of 3.5 million square feet. But we know, of course, that the economy fell very sharply, contracted very sharply by, in fact, over 12% between 2008 and 2009. And as a consequence, there was a lagged response in terms of the supply of property. And as a consequence, 2011, 12, 13, there was virtually no supply at all into the market, reflecting that lagged impact of the fall in demand. And of course that means that with demand picking up and no supply, one would expect therefore prices to start rising again. We're also beginning to see now, of course, again a lagged response with supply beginning to rise. There's very little increase in 2014. By 2015 we may see something of the order of 1.6 million square feet being constructed. In this chart we bring in the demand for commercial office space in Dublin. And we can see from this chart that that again is quite cyclical. We saw a very significant acceleration in take-up through 2005 up to 2007, and then of course a precipitous decline as the economy contracted. But interestingly enough, demand recovered probably in 2010 and has been fairly steady at around 1.5 million square feet over the recent years, picking up further in 2014 to over 2 million square feet. So I think one significant driver in Ireland is the inflow in terms of foreign direct investment. Ireland has continued to attract foreign capital, continue to attract multinationals, increasingly into the service sector, and obviously that demand for space has been a big factor in the overall take-up of commercial property. So if we bring the everything together now, we can see that this combination of very little supply in recent years plus fairly steady demand means that of course we're eating into a lot of the vacant properties that existed. So this is the office vacancy rate going back to 2002, and you can see at the peak of the cycle in 2007 the vacancy rate had fallen to something of the order of 11%, but then proceeded to rise very rapidly, and by 2010, 2011 we had something of the order of a 24% vacancy rate. But again, in the last few years that has fallen very sharply, and indeed in the first half of 2015, according to Jones Lang LaSalle, the office vacancy rate is now probably only around 8.5%. And that of course is an average across effectively across Dublin, and in parts of the more sought after areas of Dublin the vacancy rate is probably down to 5% or even lower. So where to from here now for commercial property? We've seen that the last couple of years has seen a very strong recovery, and it's unlikely that that we will see the kind of annual returns that we saw in 2014. For example, already the quarterly pattern would suggest that the total returns in 2015 will be something of the order of 30%, with probably a 20% capital gain. And 2016, I think, will slow to maybe the mid-teens. Nonetheless, still very strong returns in an environment with where interest rates are extraordinarily low, and the risk-free return is also very, very low by historic standards. We can see from this chart, what I've put down here is the risk-free rate of return in Ireland, if one likes, 10-year Irish government bond, which currently yields 1.25%, or alternatively for people with even lower tolerance of risk, we have the bond yield, 10-year bond yield, which is currently only at 0.65%. Against that, therefore, the kind of yield still available in commercial property makes it appear still a very attractive proposition. The simple yield in terms of Irish offices, 5.9% in the second quarter of the year, according to JLL, and for retail, only slightly lower at 5.5%. So those kind of returns relative to what's available in the marketplace would certainly imply, I think, that we're going to see further investor interest in the market. And with as long as the economy continues to grow at the pace it is, and as long as the FDI continues to flow into the economy, one would expect to see the returns, as I said, still remaining fairly good. Of course, over time, we will see a supply response. So over the next few years, one would expect to see a significant pickup in construction in terms of office space, and that obviously eventually will have an impact on the market. But that, I think, is still a little further out, and therefore I think over the next year or two we're still likely to see commercial property performing pretty well. So we've come to the end of our short presentation on the Irish commercial property market. If you'd like to see more about the Irish economy or see any more of Dan McLaughlin Economic Research, it's available on www.danmclaughlin.ie, the website. There's also a fairly regular, usually a weekly blog on all matters economic. Thank you very much for your attention.